Good morning. Out of the office this morning again. Won't be trading the open, and it should be in maybe 12, 1 o'clock. But I will leave the audio feed on so you can hear the news person for the morning. Okay, so yesterday we had some selling in the morning. There was a pretty easy trade in the SPYs buying into the gap fill. I did call that out live on real time for those of you who like to trade the SPYs. When I say easy, it came right down, it filled, immediately popped back up. Let's see what it did. Immediately popped back up to the 241 area, and then had a bounce into the prior day's close before gyrating a few times between 240.80 and excuse me, 241.40, and then closing right back up near the highs inside the recent consolidation range. We had mentioned that IWM had become a little bit less volatile, and that actually took care of itself yesterday, didn't it? So 137, which we've been honed in on for about a week, sold off from there over $2 right on the open. We've only been seeing about dollar sell-offs recently in it, and that was bought aggressively, much more aggressively. Well, I guess the move was bigger than the SPYs, but had a big bounce. And this morning, it's still below 137. So here's what it looks like on the 2-week. This was kind of the last hard down move. Then we gapped down the following morning. I believe I was in Chicago during that. So I'm sure people were looking at the 135 here as a spot to buy. It sprayed 35 cents through there, but see on a 30-minute, it closed right back above 135. So some good price action on that one. Seller's still in control. Just trying to get a sense of where I would. So just looking at this consolidation that broke down to 34. I would think if we started to get some closes back above 137.5, 137.60, my mindset would be looking for an upside break again. But right now, I'll still give the benefit of the doubt to the sellers. And the SPYs, benefit of the doubt goes to the buyers. Has it really? It hasn't. Let's see. It hasn't closed below. I haven't closed below 241.50. If you go back on the last 4 trading days, we opened at 241, closed above 241.50, closed above 241.50, even though we dipped. Guess we closed right there 2 days ago. And then yesterday, nice 80-cent move below 241.50, but closed cleanly above it. So I would actually use 241.20. If we started to have some closes down in this area here, that would kind of mentally set me up for being more prepared to trade the short side on a downside break. But it's all about the upside right now until sellers can assert more control, similar to what we've seen in IWM over the last few weeks. Now, let's take a look at what's in play. All right, let's start with CIEN. I didn't think anything was too impressive on this. I mean, the numbers were fine, but they guided in line. Let's take a look at the daily. See, it's a really shitty chart on the daily. I mean, just there's no trend. It's a large consolidation for the last 3 years. Remember this gap up here, I traded this on the short side. Actually got squeezed first, and that led to a huge down move. So this morning, the bid is 25.70. So really, I think the mindset is, can it work its way back up to 26 here? My instincts say look for the fade first because of the guidance. Excuse me. And other people are already doing that, obviously, to get above 26 in the pre-market. I think confirmation looks something like this in terms of if it's going to fail up here. You see a move down through 25.50, comes back up, fails in the 25.5 area, and then takes out the morning low. If it can't do that, have that hard down move, and it actually starts to hold above 26 and then hold above 26.25, it's okay to be on the side of the, the buyers at that point. They're on the conference call right now. It's probably going okay. It's still up $2.40. So it's going to be very liquid today. Could trade 8 to 10 million shares pretty easily. Next thing we want to look at is Box. Box inline guidance, I guess. I mean, Box, if you look at the dailies, had a really nice reversal. In the last couple of, let's see how long ago it IPO'd. It IPO'd a couple of years ago and just was a great short following the IPO for at least 6 months. Putting in this low here, putting in this higher low, and then getting back above. No, it was above 16. Once it broke above 16, it came back and did the retest, and it's been in an uptrend since then. So big picture, buyers are in control. I just didn't really see much in the report to make me think that it can't be faded here at 20. Now I'm thinking back to when it first came out and it gapped up on good earnings to 20. I can't remember if I traded long or short. This is a while ago. But it failed at 20 pretty miserably. So we have that level to trade off of. It's only done 40,000 shares, not a lot of information. I would just use that 20 as an inflection. Just be careful if there's a lot of buying and it starts to hold above 20, just be careful. So it does have a history of having a hard sell-off in this area. The next one is John Deere. They're buying a German construction firm, and the market seems to like that, although it's come off $1.50 now. As I last looked at it. So it was above 127 this morning. It's come off a couple of bucks now. They're paying with cash, so there's no real risk arb play there. It's just a question, does the market like this deal for them longer term? It's not well, I was going to just say it's not a momentum stock, but it is a stock that continues to gap up to new all-time highs and hold those gaps. But remember, when something like this gaps up, in this case it's still up $3, but something like this gaps up $3 to $5, you really do need momentum players to step in to keep it from filling the gap. And it's it's no easy thing. It's something now on the earnings, they like the earnings and it held 120. Gapping above 125 today, it's a little bit dicey. Let's look at the 30-minute, kind of see what it looked like on the day that gapped to 120. So in that case, it held the 120 right on the open here, and then went up $2, then drifted lower. They did get a retest the following day of 120 again. I guess the way that I would look at this is, does it hold 125? If it can't hold 125 and starts holding below, you have to look for the gap fill, at least a soft gap fill to 123.50 to 123.70. ATSG, they did a secondary. It's right at the secondary price. Which is here. It priced at the low end of the expected range. At least that's the headline that I saw. In these situations where it obviously had good news, which caused the initial move from 20 to 23.80, I like to buy in around the secondary price or on the flush below. We've had pretty good success with that in the last year. So if they did flush it down to, what did I put on here? Well, no real support till 22, but did touch this 2250 a few times since it's been up here. But that would be the first spot I would look at. A flush through there closer to 22 though would be better. And I think it would probably work its way back up to the high 22s. Cores, still long a little bit of cores from 32.5 from yesterday. So didn't get stopped out here, popped back up, and then it was accumulated, I guess, 32.60s the rest of the day. End of the day, closed above 33. It's gapping up a little this morning. Could go either way on this. Right on the open, if it flushes down to 33 or a little bit lower, and then gets back above 33, then I'd look for the move to 34. My stop is still in there. I think it was below the low, yesterday morning's low. Remember, I was in from pretty good prices and sold some into 33 and a quarter. So it's a free trade at this point. It did have a strong close with some pretty good buying coming in into the close. So if we can hold these closing levels here around 32.85, still could bounce back up here to 34. And then ADI, despite the really good numbers, they took profits. I did have a script that got me long into the afternoon. It closed pretty weak, didn't quite fill the gap. The gap fill was 85. Right at the end of the day, it flushed through 86. It's printing a little bit higher this morning. I wouldn't trust the long unless it was holding above 87 for a while, then broke to the upside. But certainly 85 is a buy on the gap fill. All right, quick meeting this morning. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.